Many people ask the question, how did this change in economic policy come about, despite a very different background in relation to most of the people who were responsible for the change. If you look at Dr. Manmohan Singh himself and look at his writings, he was in favor of planning, he was in favor of a policy which restricted to some extent the imports and so on. Therefore, the question that arises is, what caused the change in the mindset, if you want to call it, or what caused the very same people to think differently? I mentioned about devaluation. Devaluation had been done in the past, but after devaluation, there is never a change in policy. But here what happened? After devaluation, the external sector of the Indian economy underwent a fundamental change. The change occurred with respect to trade policy, the trade occurred with respect to the exchange rate policy. We dismantled quantitative controls on imports, reduced the tariffs in a balanced way. Therefore, it is devaluation by itself is not the major decision. It is a devaluation followed by external sector changes which are critical. So I would say that the very fact that the same people did initiate the changes clearly indicate the enormity of the crisis. The enormity of the crisis clearly showed that we cannot have business as usual. Simply devaluation will not do. We need a fundamental change, and that is what happened. And that is why Dr. Manmohan Singh said in his first budget towards the end, the time has come for the new idea. And that is how it happened. And I must also say that Mr. Narasimha Rao was not a reluctant reformer. Mr. Narasimha Rao was fully with the reform process. I was for a time, 1 year, before I became governor, member of the Planning Commission. And Narasimha Rao was chairman of the Planning Commission. And the 8th plan was written. And I was principally responsible for writing the 8th plan. And there he spelled out what the reforms are and why the reforms are needed. And Narasimha Rao, as chairman of the Planning Commission, completely agreed with it. But given the personality of Narasimha Rao, he was not aggressive in stating that we are charting out a new path, because he wanted to carry all the people with him. So it was Dr. Manmohan Singh who articulated the new path. He gave the theoretical and empirical reasons for making the change and so on. And Narasimha Rao provided the support from behind, but Narasimha Rao himself did not aggressively address because of the fact that he had to carry all the people with him. I remember, I don't exactly remember, but perhaps I was in Bombay on that day, not in Delhi, and considerable amount of thought and had gone into the making of the budget, because the budget had to spell out the new policy that we are charting out, and at the same time, the budget had to have specific programs and proposals which will indicate the contours of the policy framework. Therefore, I would say that we were all sitting with bated breath, as they call it, in some sense. But as you know, that in the proceedings of the Lok Sabha, before the budget was presented, there was also a certain amount of commotion, and then it settled down, and then only he could present the budget. But I believe that what the budget really stated was that we needed immediately two things to do. There were two components to the policy framework. One is stability, and the other is structural reform. Stability was required because we had a very severe, difficult balance of payment situation. We had a difficult fiscal situation. That had to be put in place. Therefore, stability was important. But at the same time, structural reforms are required because it is only structural reforms which will prevent the recurrence of the type of crisis that we had in 1991. The reform of the financial sector and the reform of the banking and the monetary sector is an integral part of the total reform process. Let me take you briefly through that before I come to the autonomy. The initial steps were to really make the changes in the external sector, to which I mentioned about reduction in tariffs, knocking away the import controls, quantitative controls, and also encouraging the exports to move. Then came, to which I shall come a little later also, the change in the exchange rate management. As far as the financial sector is concerned, there were reforms of the banking and the monetary sector, as well as the reform of the stock market and other related institutions. As far as the monetary sector is concerned, one of the important issues has always been that the ability of the Reserve Bank of India to influence the flow of credit and money requires that it has a certain degree of autonomy over money supply and the determination of interest rate. Otherwise, it becomes a second fiddle to the government. There was an agreement between the Government of India and the Reserve Bank many years ago, in the 50s, that whenever the cash balance of the government went down, then the Reserve Bank of India would automatically issue ad hoc Treasury Bills and provide the cash to the government. This seems to be a very simple, innocuous decision, that it looks like a decision to support the government to maintain a certain cash balance. But actually it meant the monetization of the fiscal deficit. So I had been speaking about it since the mid-1980s, about the need to change this. And therefore, in one lecture in Kolkata, as it is called now, that I spelled out the need to phase out the then existing system of the issue of ad hoc Treasury Bills. This, of course, requires agreement with a fresh agreement with the government. So I took it up with Dr. Manmohan Singh. Dr. Manmohan Singh had earlier been the governor, so he is fully aware of the implications of this. And after much consultation, it was agreed that it will be phased out over a period of time. The response of the finance minister, then Dr. Manmohan Singh, was immediate and recognized the need for doing this, and therefore the agreement was a new agreement was signed. And we also recognized at that time that the Government of India would require from time to time temporary support, and that is why a new system of ways and means advances was instituted, and this was phased out. So I would say that this represents a singular recognition, both on the part of the Reserve Bank of India and the government, to move towards a system in which the Reserve Bank of India will have the ability to be able to influence the quantum of money supply. Well, there are several budgets which carried through the, I can't remember the years and so on, but I think there are several budgets which carried forward the message. And I do believe that it is not only the Congress government, but also the other governments that came, more or less followed the same tenor. Then there was the significant budget in which the income tax rates were brought down much later in the 1996-97. Therefore, the one interesting thing is that there has been a continuity as far as the reform process is concerned. There are, of course, differences expressed, but fundamentally, I would say that the last 25 years, despite some changes in government in between, have followed the reform process, and we need to carry it further into the future. But I would only say that which I mentioned earlier, the reform process is important in order to get the system more efficient, to get the system more competitive. But we must get away from the idea that somehow the emphasis on competition is diluting